This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you from the CNBC TV18 Motilal Oswal studios after what has been a fantastic Monday. What will it be for Tuesday? I'm thinking of an appropriate adjective.
What comes to your mind? Super Monday followed by?
Tepid Tuesday? I'm not sure. I mean, global cues are a little okay-ish. And of course, we had this big flourish of a move yesterday. So we'll see. We'll coin the phrase closer to the market open, maybe little after market open. But overall, nothing really to worry in that sense. I'm Prashant, with me, my colleagues Rima and Nigel. Guys, hi, morning.
Well, morning, guys.
Hi.
Yesterday we had a splendid rally, but just want to mention a quick word and, thoughts and prayers with all those in Chennai. Things are getting a little bit uncomfortable out there. The flooding overnight, the electricity as well. So all our brothers and sisters, our thoughts are with you all, and hopefully things are on the mend. And hopefully, the hope is that today will look much better than yesterday for them.
Landfall today.
So hopefully that settles down as well.
Did you guys see that? I think there was a picture going around of a crocodile on the streets of Chennai. You didn't see that? The big one. I said, well, this is something. No, I've never seen something like that, at least in Chennai. Well, let's just quickly take a look at what you need to know as we begin another session this morning. So we had a massive move yesterday. It's a Super Monday, massive Monday, whatever you want to call it. It was a big one, 2% on the Nifty. And in one day, this is the level we put out exactly yesterday, 8 o'clock. Medium-term target for the Nifty is 2,700. That's basically nothing but, if you join the tops, the previous tops, it extends all the way up to about 2,700. The high yesterday was 2,702. So with yesterday's move, we are already there. Institutional flow, it's been backed, and we were saying this towards the fag end of the session. You'll need to watch what institutions are doing, both FIs and locals. So combined, it's about 6,800. Roughly rounded off to about 7,000 crores of institutional money which came into the market, right? So again, huge. The third one is sentiment indicators. Again, something we pointed out yesterday. FIs were short 47,000 contracts in index futures on Friday. That was halved. So as of yesterday's close, the FIs are still short about 25,000 contracts, 25,000 contracts in index futures. Now, a lot of it has been unwound, so there's been a fair bit of covering, but there is still some distance to go. If you are basically looking at whether the market is getting too hot to handle and whether things are getting too overstretched, then you've got to look at extremes. And we're nowhere near the extreme. We are coming back into the neutralish kind of zone. All right, let's just rewind the clock back to what happened overnight. So US markets, action has been subdued. So S&P was down about 0.5%. The Nasdaq is down about 1%. Mega caps, right? Apple and Google and Facebook, etc. The tech mega caps are the ones which saw some pullback. The small cap space rallied 1%. The Russell 2000 was up about 1% or so in trade. The 10-year yield backed up about 6 basis points. So we're at about 4 to 4.25%. And the dollar index moved up about 0.5% as well. Gold prices, they hit a new high intraday and then they fell about 2%. No real one, I could not find a discernible one big reason why US markets saw some pullback. Just seems technical in nature more than anything else after the rally that we've had there. Lots of data in the US this week. Between now and Friday, but the big one is going to be the non-farm payrolls data, the monthly jobs data, which we will get on Friday. And I think it becomes important to kind of see how this pans out because last Friday, we had that statement from, Fed Chair Powell, which basically, in a way, reinforced expectations that they're done with rate hikes. So you don't want, a big hot jobs number, which once again brings rate hikes into the play once again, because the market is talking about whether it's going to be 100 basis points or 130 basis points of cuts next year. So we'll see. We'll watch this one, but lots of data. Now, just to come back to the market here, as I said, we've already hit the 20,700 level, which is the medium-term resistance. Next major resistance zone, based on Fibonacci retracements extensions, is between the 20,850 to about 21,100 levels. So this is the next major zone, which the Nifty perhaps should get to. As we've been saying, it's likely that between now, I mean, first of all, the intensity of yesterday's rally is unlikely to be repeated. It never is. It was a reaction to something which was a surprise to the market, but is now priced in. But it doesn't take away from the fact that this will continue to show up in a positive way from here over the next couple of months. But we've got to, I mean, as they say, the long term is not, forget the long term, the medium term is made up of many short terms, so you've got to navigate that through. So it's possible the market starts a little higher. I would say the bias still remains on the upside. I don't think there is any great kind of hurry to take profits or forget about, I mean, shorting the market. Nifty Bank has also just now, after many weeks of kind of lagging, is only yesterday broken above the previous all-time high. We closed at 46,431, so we broke and closed above it. For the Bank Nifty, the medium-term resistance comes in at about 47,700, which is, I mean, 1,300 points away from where we are. And supports for the Nifty Bank, because the Nifty Bank has been the weaker of the two indices. I'm just putting out, you've got to look at hourly averages and maybe use these as trailing stop losses. So the 20-hour comes in at 45,100 and the 40-hour comes in at about 44,800. These are the closest that I could find, but that's what you've got to do, if you're trading. The best thing to do in a market like this is not to take sort of, jump in and jump out every day, because the market has got some certainty here. So, I mean, if you are in the money and you're kind of, you can hold those positions, the best thing is to just hold those positions. I mean, if you're a compulsive trader, then of course you've got to navigate these, tepid kind of days, which I think today may be one of those, and then sort of come back in when the market gives you a meaningful dip. But the broad thing to do is to buy dips. Will we get meaningful dips? I think that remains the only question. Rima.
Hi, so today is going to be a bit of a tug of war or a push and pull between weak global cues. So Asia right now, Nikkei is down 1 1/3 of a percentage point. Hang Seng has a cut of 1.2%. The Chinese markets, Taiwanese markets, that Shanghai and Taiwan index have cuts of more than about 0.5%. So you've got weak Asian markets cues on one hand, but very strong momentum, which we displayed in the Indian markets yesterday, which is why the GIFT Nifty, the implied open, still has got a positive bias. But you spoke about that gush of foreign money. Well, it's found its way into the banks. Look at the delivery volumes of large private sector banks. For HDFC Bank, the rank underperformer yesterday on NSE itself, you had the delivery volume standing at 3,000 crore rupees. ICICI Bank at about 2,000 crore. State Bank of India and Axis Bank too. So close to about 800, 900 crore of inflows. For HDFC Bank in particular, that's the one we're focusing on, the delivery volumes were about 2.5 times, 2 to 2.5 times of what we typically see. And delivery action has been picking up in HDFC Bank over the last couple of days since that banking rally began in the Indian markets 4 or 5 trading sessions back. Similar picture with ICICI Bank as well. Very strong delivery action yesterday. On NSE itself, we had about 2 crore plus contracts marked for delivery. In terms of a quick, events to watch today, you've got the India Services and Composite PMI. Japan CPI inflation data is already out. Patanjali Foods investor meet is going to be out. I think that's scheduled today at 4:30 p.m. Ganesh Benzo small company, but it's meeting for a fundraise, and we'll be tracking the developments of the cyclone.
Well, that's right. Rima, yesterday was as good a session as any. Yeah. When you start off 300, 330 points higher, and you end even higher than that, that's the kind of trending day that the bulls were looking forward to. The Nifty as well as the Nifty Bank, you pull up both those two charts in today, and that'll tell you the picture. We had a good trend day both on the Nifty as well as the Nifty Bank. Beautiful looking screen out there. What's backing this market? Institutional buy flows and short covering. Let's pull up the institutional numbers first. They are on a buying streak. Whether you're looking at the FI number, all the net institution numbers, both of them on an average basis, you're getting 2 to around 3,000 crores odd. The banking names, they did very, very well yesterday. And out of the 420 points on the Nifty, well, the banking names that are part of the Nifty, they accounted for more than 60%. 2 stocks in there, that's HDFC Bank and ICICI Bank, well, they accounted for close to 40%. So just, out of that entire 420 points odd, bulk of it came in because those 2 large heavyweights, they did very, very well. Moving to the point on short covering then. Yesterday, the FI has added more than 20,000 long contracts. That's in a single trading session. We haven't seen such a large long position addition in a single session all the way since June. So that's massive out there, 20,000 contracts in a single session. And that's why if you look at it, just take a look at the short positioning. That's come down from around 76% all the way to around 56%, telling you that longs are going up and the shorts are coming down as well. And the power of short covering, in the last 45 days has been perfectly displayed, because the FIs, they were net short at around 1.5 lakh contracts. The Nifty had moved around 18,800. Now those net short contracts have come down to around 25,000 contracts, and the markets are up close to around 1,800 points. So that's the power of short covering that we have seen. What are the levels I'm looking at? Well, there are two strikes that I'm looking at. The 20,500 put on the downside, that has the highest open interest on the downside. That contract expires in the next few days. And on the upside, I'm looking at the 21,000 call. So just, plugging in both those two numbers in there, and I'm taking into account the premiums as well. That's the broad band we're looking at. 20,500 put, the rough premiums around 50 rupees. So 20,450 becomes an important support zone. On the upside, 21,020, that becomes a bit of a resistance zone. I still think that that date with 21,000 is well and truly on, and we're likely to see that number sometime in December itself. And, if you're going to move up, the Nifty Bank needs to participate. And now that post that breakout that we have seen, it's left the 50 and the 100 DMA well away. Just take a look at that. We were in that range for quite a long time. Now the Nifty Bank has taken off, has broken that level, and the 50 and the 100 DMA are a few thousand points low actually in comparison. And this has happened in the last 7 days or so. The Nifty Financial Services Index as well plays out expiry. You need to maintain a long bias, buy the dips, and in fact, trail your stop losses. I think that date with 21,000 is well and truly on.
Well, that is the next resistance zone, as we highlighted, 2850 to about 21,100. Well, let's just run you through what you need to know in terms of what's lined up here on the show over the next 2.5 hours or so. We will get you updates from markets across the globe. Richard Harris of Port Shelter Investment Management will be joining in with his sort of viewpoint. We get you the top 10 stocks of the day coming up with a research team. And at 8:30, we do a fundamental stock check. Nishal Maheshwari of Centrum Broking will be with us for that. Stay with us.
On equities, Lawrence Belanco of CLSA says positive equity seasonals, as well as the tendency for mean reversion trade in laggards, remain front and center. In the United States, on the macro front, he adds, gold is on the verge of confirming a breakout after more than 24 months of consolidation, while copper is threatening to break out of its 6-month trading range. In Asia, India's Nifty continues to accelerate to new all-time high levels, with the MSCI India ETF confirming this breakout. On the Nifty specifically, Lawrence says the index continues to work its way higher following the breakout above the 50-day moving average and the short-term downtrend drawn off the September highs. This signals the resumption of the original breakout from 2021 to 2023 consolidation pattern, and it supports upside targets of 21,200 to 21,300 and then 22,800 to 23,000.
Okay, all right. Well, let's get you some money market views now. On the rupee, we have Abhishek Goenka of IFA Global, who says that despite November seeing the highest net FPI inflow in debt markets in 6 years, worth $1.8 billion, and equities too, seeing net inflows of $1.1 billion after 2 consecutive months of outflows, rupee continues to remain extremely range-bound. The currency is also not strengthened despite a drop in US yields, a weaker dollar, and lower crude oil prices. He expects the rupee to continue to underperform Asian and emerging market counterparts. He expects the rupee to trade between 82.9 to 83.7 to a dollar against the range against the dollar over the medium term.
On the bonds, Ajay Manglunia of JM Financial says domestic bond market is trading in a narrow range ahead of the MPC meet later in the week, where RBI is expected to maintain a status quo. The lower crude prices are supportive of a correction in yields, but uncertainty and fear of an OMO sale is keeping traders cautious. He expects the benchmark 10-year yield to trade in a narrow range of 7.25 to 7.3% today.
Well, a lot of stocks that we need to track today, and in our special top 10 segment, we're looking at Bank of India, IEX, JSW Infra, DCB Bank, Unichem Laboratories. All of them will be reacting to positive news flow. We also have CAMS as well as HCC, so they as well will be added to the positive news flow list. On the flip side, Honasa, Mahindra & Mahindra Financial, and HCL Tech will be reacting to negative news flow.